Hey everyone, welcome back to Corporate Decoder, the place where we uncover the real stories behind the corporate jargon. Today, we're diving into XOMA Royalty Corp's latest report, and let's just say there has been a bit of a shuffle in the C-suite that is worth unpacking. Before we get into the nitty-gritty, make sure you are subscribed for more of these no-nonsense dives. And if you want to chat about these filings or anything else corporate, join our Discord community. The link is in the description below. So, what is the big news? XOMA Royalty Corp has a new Chief Financial Officer, and the old one is heading out the door. This kind of change is always interesting because it can signal a shift in strategy or a response to performance. The main event here is the appointment of Jeffrey Trigilio to take over as the Chief Financial Officer. He is stepping into the shoes of Thomas Burns, and this transition is happening on the 12th of January 2026. Mr. Trigilio is 41 years old, and he brings a solid background from the biotech world. He was most recently at Obsidian Therapeutics, Inc., where he was involved in finance, operations, business development, and investor relations. Before that, he was the Chief Financial Officer at Cullinan Therapeutics, Inc. from 2020-24. It looks like XOMA is bringing in someone with direct experience in the kind of industry they operate in, which is generally a good sign. Now, what does this mean for Mr. Trigilio's compensation? Well, he is not just walking in for a handshake, he is getting a base salary of $515,000 per year. He is also eligible for an annual bonus with a target of up to 40% of his base salary. On top of that, he is getting some stock options. He'll receive an initial grant of 30,000 performance units, which will vest based on reaching certain stock price targets, and he'll get an annual equity grant later in 2026, valued at about $180,000. This is a pretty standard package for a CFO joining a company of this size, aiming to align his interests with the company's long-term success. The agreement also includes what happens if Mr. Trigilio is let go or decides to leave for good reasons. If the company terminates him without cause, or he leaves for what is defined as good reason, he is entitled to severance. That includes about 0.75 times his base salary in cash, a prorated bonus, and continued health benefits. However, if this happens around a change of control of the company, his severance package gets a major boost. He would get 1.5 times his base salary plus target bonus in a lump sum, plus health benefits for up to 18 months and accelerated vesting of his equity awards. This is pretty common in executive contracts to incentivize them to stay through potential mergers or acquisitions. Now, let's talk about Thomas Burns. He is stepping down as Senior Vice President of Finance and Chief Financial Officer on the same day Mr. Trigilio officially starts. It looks like Mr. Burns and the company have worked out a separation agreement. He'll receive the severance and benefits previously outlined in his employment agreement. Importantly, some of his performance stock units, where the company's stock price has already hit the target, are being fully accelerated, meaning he gets them now. His remaining performance stock units will stay in play and could still vest if those stock price targets are met later on. As part of the deal, Mr. Burns will also be providing consulting services for an initial 3-month period, earning $16,000 per month. This is a fairly standard way to ensure a smooth transition and leverage the departing executive's knowledge. The company is thanking Mr. Burns for his contributions, which is a nice touch. The company also announced Mr. Trigilio's appointment via press release on the 12th of January 2026. This is standard practice for significant executive changes. These announcements are designed to keep investors informed, and this particular filing clarifies that the information is being furnished, not officially filed, which has some legal implications regarding liability. Now, while this filing focuses heavily on leadership changes, it is important to remember that these appointments don't happen in a vacuum. The financial performance of XOMA Royalty Corp is what ultimately dictates the company's direction and the success of new leadership. Unfortunately, this specific 8K filing doesn't contain detailed financial tables for us to dissect. It's primarily an announcement of executive changes. However, looking back at XOMA's typical filings, like their 10Q or 10K reports, you'd be checking for things like revenue growth, profitability, operating expenses, and cash flow. For instance, if we were looking at a financial statement, we'd want to see if revenue is trending upwards, if their operating costs are under control, and if they have enough cash to fund their operations and strategic initiatives. A key metric for a royalty company like XOMA would be the stability and growth of their royalty streams. Are the underlying assets producing as expected? Are there new partnerships or acquisitions that can bolster those streams? The success of Mr. Trigilio will ultimately be measured by how he can manage XOMA's finances to support its growth strategy. This includes ensuring they have the capital for potential investments, managing debt effectively, and maximizing shareholder returns. In the past, Companies like XOMA have dealt with the challenge of fluctuating market conditions impacting their royalty income. New leadership is often brought in to navigate these complexities, find efficiencies, and potentially identify new revenue opportunities. So, what is my take on this? The appointment of Mr. Trujillo signals a clear intention by XOMA Royalty Corp to strengthen its financial leadership. His experience in biotech finance is a definite plus, suggesting a focus on sound financial management within that sector. The severance packages for both executives seem fairly standard for this level of position, designed to facilitate smooth transitions and protect the company's interests. The main risk here, as always with companies in dynamic industries like biotech, is market volatility and the performance of the underlying assets generating the royalties. While this report doesn't give us the raw financial numbers, the move to bring in a new CFO indicates a proactive approach to financial stewardship. XOMA's direction will depend on how effectively internal and external capital is managed and deployed to generate those royalty streams. It will be crucial to watch XOMA's subsequent financial reports, specifically their balance sheets and income statements, to see how Mr. Trujillo's tenure impacts the company's financial health and growth trajectory. Keep an eye on their ability to manage their expenses, secure funding for growth, and, most importantly, ensure their royalty portfolio remains robust. Alright, that is our breakdown of XOMA Royalty Corp's latest update. What is your take on these leadership changes and what they might mean for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.